Alrighty, guys, welcome back for a video on Twitter. What has happened in the past? This is the past week, actually, ever since Monday. And yeah, as always, like, subscribe, thumbs up, give me a comment, all that good stuff. And let's dive into the business here. It's yeah, as I said, it is like 4, 5 days old charts, but still, most of them are long term, so they are very relevant nonetheless. Doesn't matter at all. Let's look at the stuff here again. Grady, again, great guy, does some amazing long-term charts, ratios, all that good stuff. Worth a follow, in my opinion. Uranium is just getting started here, even though the URNM moved almost 600% in its baby bull, move up from the 2020 lows. And you can see here a stunning, almost perfectly symmetrical inverted head and shoulders between URA and the U.UN, basically the spot price. And yeah, the uranium miners is breaking out against the spot price right now, or it started last week. So beautiful. And if you run this all the way to the top, let's say, which is very common in such a perfect symmetry here, you go from, let's call it 120 to roughly like 6, right? So a 5x outperformance by URA against U.UN. And yeah, U.UN will not be standing still here, that's for sure. Beautiful. Great chart. Here we have Tavi, Costa. Uh, Japan is a compelling case study of an economy that has suffered from a prolonged period of monetary and fiscal indiscipline. Um, it is no surprise that gold price in Japanese yen's terms persistently reached record levels. The situation is not exclusive to Japan, and other currencies are subject to similar monetary debasement relative to hard assets over time. And you can clearly see here the the difference in gold compared to yeah, from the yen and the USD, like a 50% gap here. Again, gold will do the exact same for you for the dollar as always. Well, not always, but often the US dollar, no matter if it's gold and silver, or platinum, whatever commodities, it breaks out at the end, or yeah, as the latest one to do. So yeah, gold is also in for a big run in USD. Believe it or not, actually. Grady here. TLT is again right at the blue possible head and shoulders neckline. A bounce for US bonds here is reasonably, maybe for a double bottom. If so, also a double top for US yields. Lower rates would be good for gold. That's for sure. You can see here um, the possible. This is the neckline, and then the possible bounce all the way up to here, and then become crashing down. And as he mentions here, QE Infinity will be coming here. That's for sure. If that happens, they will be pumping money into the systems like you haven't seen before. The 2020 QE will look like a little splash in the water compared to what's coming. So yeah, great one here. Rashad here, silver. As you know, this is also a flag that I've been pointing out many times. You have the pole here, the major long-term flag, and then you have a breakout here again. This points to roughly 38, and then you have some longer ones that is the longer price projections that points to 65, I think, give or take. And yeah, as mentioned, when we get above the $36 level, we are in for that big move, really. A weekly close above 36, and you could actually a few weeks later start to see limit up in silver. Yes, I said it here on the channel. I mean, there are so many shorts that needs to cover, and it has been suppressed for so long that you clear 26 in my view, you will see some great stuff happening. I can't click here because then I go to a different website. But anyways, this is just silver showing you a cup and candle here, a bowl and excuse me, a cup and handle. Again, I wouldn't draw it in this way. Doesn't matter. It is valid, and this one points to move to roughly 50. So to fill up the major cup on the long term. Again, silver looks primed here. Really, we are currently at what 22, 22.5, and only like 10% more, 15% more, and you have broken that 36. So 26. So Patrick Kahim, again, long term charts here really. Here are the most three important trend lines over the past 70 years in the financial market history. SPX priced in crude oil. This is the move up until 70s, and then you can see the SPX started to heavily underperform crude oil. Again, that's when commodities took over. Gold and silver, yeah, oil obviously, and platinum and so on had like a 10, 12-year long bull run from there on. Again, later on is from the lows in the 80s to the early 2000s, you have this major run up here again. And again, gold started to outperform the indexes in the early 2000s. And you can see here again, really, the run up here, and we're about to break down here, hopefully. And you will have commodities again doing what it does best. That's on uh, point in time just to heavily outperform the SPX, Nasdaq, and so on. Tech. Beautiful observation by Patrick. No doubt about it here. Again, Patrick, you can ignore this chart all you want, but crude oil's performance versus SPX is telling us something very, very important right now. Are you listening? Again, this is the breakout pack, early 2000s, and then it had a big move up in oil, and we are basically trying to replicate this move right here, and then you know what's come next. So there it is, really. Great way of showing it. Great visuals. I like it. I like it very much. Jay Hinster here. DNN. Next three resistances. You can see here the first one was taken out. This is from this is yesterday, and it had like I think 5% today as well. It actually broke out for some major long-term resistance. Go check that out on the YouTube, on the Twitter. I made a post of that like 6 hours ago. Anyways, we have major upside here. We are currently at 1.5. As you know, 1.5 was one of the major ones to go above. And now it's game on really for Denison. And we have 3 levels here, which could easily be met, over the next 6 months or so. Beautiful breakout again for uranium. Looks fantastic. Francis here, the market sniper. Again, one account you must follow. Great technicals. It's great to explain the stuff that he do, and yeah, just an overall very skilled guy when it comes to technicals. Spot uranium may pause after a big move. It's run our second interim target, but it likely has a target of 27. 27. That's beautiful. That's absolutely beautiful. And yeah, we broke this $20 level, which was a big one. You can also see he marked it here. And he now has a target up here on 27, meaning roughly 40% higher from where we are today. And you can imagine what that would do to the uranium spot price if we had a 40% move in U.UN. So that's nice. Bonker 99 here. This is gold. You can see here for the past 1 year, give or take. Triangle squeeze here. And yeah, you also have a line here that I have on my chart. And then hopefully we will rocket higher. I actually think the price action we saw yesterday and today for silver and gold is very bullish. It negated some huge breakdowns with a quick reversal. Again, it's only 2 days old, so we might have to see next week what happens here. But again, doji here on the gold chart. So yeah, Tavi again. Brazilian equities is currently continuing to do remarkably well, despite significant strength in the dollar. And you can clearly see the correlation here between commodities and the Brazilian stocks. And again, you can see the Brazilian stocks here in yellow, and you can see the overall commodities just going absolutely higher. So you have a big gap here, and and that's why I also have been saying on the YouTube and on Twitter that the Brazilian ETF looks absolutely fantastic. I think we need like 3-4% more to have that major breakout where I will be buying, and that's a 15-year long formation that is forming, and you can run this for 5 years. Plus, it gives you 8% dividend to hold this ETF for 5 years per year, of course. Again, looks absolutely fantastic. Also, typically when you have these emerging markets rallies, their indices, that's typically when the dollar tanks big time. So there is a big inverse correlation between those two. So again, if the Brazilian ETF is about to go way, way higher over the next 5 years, the dollar should go the opposite way. Great chart by Tavi. Sahara here again. SBSV, miners, bullish, rising wedge, falling wedge, excuse me. And that's also one thing I have noted. You can find it on Twitter here. A beautiful full EV corrected move within a falling wedge. And yeah, this one is heavy into gold and silver, not silver particularly, but gold, platinum, palladium, and so on. And this move right here is with a high momentum. And yeah, I think we'll have a breakout here into October. Excuse me, for this stock here again. It's one of the bigger ones, so they don't need any new cash to come in, I think. But yeah, overall looks fantastic. Again, platinum and palladium is at a very big turning point here, and I think I have a feeling for palladium that it's going to run a big move here when it breaks out. Obviously, we want the 1150 to hold on the palladium chart. But anyways, North Star, my good guy Kevin here, gold on the 2nd of August 2020. I made it clear that there were two main scenarios. Scenario two is exactly what happened. And again, Kevin is insanely good at finding these long-term RX, right? Like that, like he has here. And he saw the blow off top here on August. That is actually the peak. I think it peaked out on this day actually. And ever since we came all the way down, we have made the handle. So we have the cup and now we have the handle. Again, gold is waiting to break out above this 2070 dollar level really. And this cup has a measured move to roughly 3K. And you also have a flag here that is pointing to like 2.8K, I think. So that will be the next move here, and it will go rapidly. I think it will only take like 18 months or so when we break that all-time high. And yeah, I think gold will do it within Q2, Q4, or maybe Q1 in 2024. So yeah, great prediction, and it all came into fruition by Kevin here. So just want to give him props for that one. Just a quick one here. It's not technicals per se, but you can see here for the first time in 45 years, the US Treasuries have now higher downside volatility than gold. I'm just saying that's a big change in sentiment that that you have treasuries with a bigger downside volatility than gold, actually. You can see it here with the greens. So just want to let you know, again, gold, everyone hates it. And funny enough, because it's 5% or so, give or take, from the highs, maybe 10, yeah, 10% from the highs, and everyone hates it. And we are, in my view, about to go and test the all-time high for the fourth time. And that is going to be where we break out. That was all the charts that I have collected for today. So yeah, I will let you go here. Hope you enjoyed it again. The weekly close is here. The market has just closed half an hour ago. I will do the uranium recap now and the commodities as well. So look, hope you will join me on those. And as always, leave a comment, give me a thumbs up. And yeah, do you agree? Do you disagree? What you see? I will happily discuss your take on everything. Have a great weekend, guys. Stay safe. Bye.